So in today's live stream, we're going to start by talking about the dollar first. And so far, you can see the key levels I outlined yesterday on the dollar. Firstly, we're going to go to the weekly time frame. So firstly, we're going to start from looking at the weekly time frame. And on the weekly time frame, you can see we have this inefficiency, and I was watching this inefficiency closely, and I said yesterday, if we are going to see any sort of support, is going to be from this key level. But if this key level fails to act as support to send price to the upside, then most likely we're going to continue lower to the downside. Remember, we have a low resistance liquidity resting right here, inefficiency, and as well an overall low resistance liquidity resting right here as well. So we scale down to the daily time frame. And on the daily time frame, you can see how price has consistently been trending to the downside. So we'll go to 4-hour time frame. And on the 4-hour time frame, I talked about this 4-hour inefficiency as well. And price mitigated this 4-hour inefficiency yesterday. And I outlined this inefficiency at the upside. So we'll have the buy side and the sell side imbalance. So price came into this imbalance, into this inefficiency, mitigated it. Then we saw an expansion. Went into this one. I said yesterday, if we're going to see any sort of resistance, I'll be anticipating for that to happen from this key level. And very nicely, price pushed through it, and then we saw a massive rejection of that key level. So most likely, this sell side liquidity resting right here is going to be the next draw on liquidity. And after that, most likely we could potentially continue lower. And right here, the borders of the candle will be the next key level I'll be looking out to see price come down into. So that is what I'm looking for to see on the dollar. So we're going to look at Euro US dollar. So for Euro US dollar, I'm still very much bullish. Like I said previously, I'm still very bullish. In as much as I was anticipating to see if whether we're going to see more retracement to the downside, this black line right here outlined yesterday, because we mitigated the weekly inefficiency resting right here. So I said if we're going to see any sort of resistance, it's going to be right here. And if we do see that resistance, I'll be looking forward to see a run on sell side liquidity. But overall, I still remain bullish. I'm still looking forward to getting to buys for price to continue to the upside, because overall, the market direction on the 12-month time frame, 6-month time frame, 3-month time frame still remains, market structure still remains bullish. So all I'm looking forward to see is a continuation to the upside, irrespective of the fact that for a while now we've been trending to the downside. You can see since December, we've been trending to the downside, but it doesn't really mean that the overall market structure is bearish. On the intraday levels, we're bearish, but overall on the 12-month, 6-month, 3 months, the overall market structure is bullish. Now, that being said, take note that this key level is going to be a key level to really watch for next week. This is the key level I'm anticipating to see Euro come into for this new coming week. And I think we're gonna have FOMC. I think that's gonna be next week Friday. I'm gonna check the Forex Factory to confirm that. So one thing to put into perspective when that's gonna happen is it's either price is gonna continue to the upside, or that FOMC is gonna facilitate for price to go really deep to run extreme sell side liquidity. So the reason I'm saying this now is so by next week, if for any reason we see huge, massive sell-off on euro, do not be do not feel afraid to still look for buys, because the FOMC usually it could drive price to extreme levels. Let's say for example, you can see right here, this move right here. You can see this move right here was the first week of April, and the FOMC usually comes out on the first week of April. You can see right here on Friday. This was on Friday. This right here was on Friday, on Thursday, and on Friday. So this was the FOMC week. The FOMC, a day before the FOMC and the FOMC day. So you can see how that drove price to extreme levels. So anyone who was bearish on the intraday levels will no longer be interested in looking for a sell, because of how impulsive price went to the upside. Because there's this inefficiency, and most traders will be trying to sell from here. But during the FOMC, one thing to put into perspective is the fact that you need to be looking for liquidity, not inefficiency. A high, a low, a run on liquidity. That is what you need to be looking for. So in this case, when we come into this position by next week, and then the FOMC is on Friday, I'm going to check to confirm whether the FOMC is going to be next week Friday. So if the FOMC is on Friday, before Friday, let's say from Tuesday, Wednesday, Thursday, we could see price go towards the opposite direction extremely, just like you saw it go towards the opposite direction right here extremely. And then after the FOMC, the next week, we saw this massive drop. So if we do see for any reason before the FOMC a massive move to the downside, we'll be looking for extreme levels to still get into a buy to continue higher. Because overall, I'm looking at the low resistance liquidity. I'm looking at the 12-month time frame being bullish. Right here, 12-month time frame market structure bullish. And you can see how nicely this right here, the 12-month close, you can see that red line. You can see how nicely price came below it, and then we had an accumulation below it. Like I said, if you want to buy, you want to buy below or below the open of the higher time frame. And you can see how nicely price came below the open, accumulated, expansion. So we're going to look at AUD US dollar because we're currently on a trade on AUD US dollar, and trade is moving very nicely. 1:6 risk to reward ratio so far right here, where 1:6.2 profit. So if you're satisfied with your 1:2, you're very free to close the entire position and take your 6% and call it a day. But personally, I'm still holding this trade. I'm going to be holding this trade for the long term, not for a few weeks or days. I'm personally holding this trade for a very long time. The overall take profit for this trade is around here. That is the overall take profit, is a 1:16, about 16%. So we're not halfway, but we're close to halfway. I think when we're around this position, that's going to be halfway, which is going to be 1:8. So I still believe we'll have a very long way to go on AUD US dollar. My overall target, looking at AUD US dollar from the 12-month time frame, you can see we'll have a high, a low, a break of structure. Price came to extreme discount, took liquidity, mitigated inefficiency, and we saw this massive rejection. So us coming down here is an opportunity for us to look for buys to continue to the upside. So if we look at the weekly as well, you can see the weekly levels. So right here, you can see this is our key level, and also the 4-hour inefficiency. You can see the 4-hour inefficiency resting right here. I talked about this key level months ago, and I said I'm not going to touch AUD US dollar until we come into this position. And that is the reason why when I'm touching it, I'm holding it, because I waited months for price to come here. I'm not going to close the trade in a day or a week. I could literally hold this trade for a month. And the reason for that is because my overall target is very, very high up. It's very, very high. So right here is one of my targets, 1:37. So right here, 1:37 is also another key level I'm watching. My overall target, where I'm going to close the entire position, is at a 1:71. It looks like it's literally, I call this an unrealistic expectation, right? I wouldn't advise any trader to get into the market expecting to catch a 1:7 to 1. It's unrealistic. But at the same time, you need to understand the kind of trader you are. Are you a scalper, a day trader, or a swing trader? I'm a swing trader. I'm looking at the overall market direction. That is why whenever I want to do an analysis, I start from the 12-month time frame, because I'm looking at where is the market going? Where is the overall market direction? Are we bullish or bearish? If we're bullish, I'm waiting for extreme discount. And coming to an extreme discount could take months. It could take months for that to happen. But when it happens, you can catch a trade that will make you profit for the rest of the year. That is the good thing with being a swing trader. The pros and cons are there. The pros, one trade could literally set you up for the rest of the year. The cons, you could literally stay months without trading. You need to have a high level of patience to be a swing trader. So that being said, currently our stop loss has been trailed to profit right here. Our stop loss is resting right here. So even if for any reason price reverses and takes us out, we're going to leave with 3% of our profits. So right here is our stop loss. So if price reverses, takes us out, we leave with 3%, which is still incredible. So we'll leave with half of the profit so far. And as we go higher, we're still going to take profit, trail stop loss to even more profit just in case. Because irrespective of the fact that I believe this is going to go really high up, there's no certainty, there's no guarantee that it's going to happen. So that being said, we're going to look at NZDUSD. Yesterday, there was a trade entry that I wanted to get into an NZDUSD but for some reason, price took me out, came down, and then late hour of the day, it eventually broke structure, and I got into the trade, but I wasn't able to share with the members because of the time of day, because it was really, I think it was around 8 p.m. or 9 p.m. or something like that. So I felt like a lot of our members that are in the UK or using similar time with the UK time, they are not really gonna get into the trade. So I just felt like it was just gonna be a bit complex because they're not gonna get the trade. So I just felt like just holding on to it and watching to see what price is going to do today and whether we can get a re-entry. So right here was the trade. After we mitigated my position, we created a high and low, broke structure, came back. You can see the red lines, my entry, price tapped into my entry, and then we expanded higher. So it was a beautiful trade. And right here was a re-entry as well. So you can see a high, a low, break of structure, came down, retest, expanded. This would have been a beautiful retest, a beautiful re-entry, stop loss resting right here as well. So I'm still very much bullish on NZD US dollar. I still want to see higher prices on NZD US dollar. So far the trade is in 1:5 risk to reward ratio, 1:5 profit. If we had gotten into this one, we would have been in a total of 11% profit for today. But at the end of the day, we're still going to be looking forward to see other trade setups. And another one I was watching was gold as well. So previously, I put a limit order on gold right here. I think that was on Wednesday. I put a limit order right here on gold, and for some reason, I moved the limit order lower. I moved it lower to right here. So for some reason, something happened last night, and then price came into that first entry that I posted, mitigated it, and then rallied. So anyone who was fortunate enough to not have moved their entry on gold would have been on this trade, but I'm not on the gold trade because I moved my entry a little bit lower because I was anticipating to see a run on liquidity, and also was anticipating to see price mitigate the bodies of the candle, which is resting right here. You can see it right there. So you can see the bodies of the candle. I wanted to see price come down into that bodies of the candle, but eventually, unfortunately, it didn't come into the bodies of the candle. So we missed the trade eventually. So I'm just gonna see what price is gonna do so far if we run above this high, because this is my range that I'm working with. So if price should rally above this high, then that means that trade has become invalid. So I'm just gonna have to collapse it. But I'll keep you all updated. But if we don't rally above this high, and then we keep coming lower without breaking any smaller time frame structures, then most likely price may want to mitigate here and then continue higher. Overall, I still remain very bullish on gold. I still want to see higher prices on gold. And it was a very nice, beautiful trade on gold. It's just quite unfortunate that I moved the entry from where it was to lower level. So one thing I think I'm gonna do moving forward is because my entry model is very precise, and a lot of our members do complain that their broker doesn't let them into the market for some reason, probably due to slippage, or the offering price is different from the offering price of the broker I'm using. So what I'm going to do in order to make it better for everyone to always get activated into the trade is whatever entry that I'm looking at, I'm just going to add more pips to it. It just means that you're going to be in a little bit of a drawdown. The reason my entry is precise is because I don't like being in a drawdown. That is why you can see even this entry right here that I put in on gold, there wasn't any drawdown on this trade. So if you had gotten into this trade, it would have just tapped you in and then left. So that's usually how I like to trade. I'm always looking for this kind of setup. So when I'm right with my analysis, this is how I want it to go to. This is how I want it to be. It's just like if you look at this AUD US dollar trade, you can see as well this was the entry, and you can see how price tapped the entry and left. That's usually how my entries are, very precise. I don't like being in a drawdown, and that is why a lot of the time you can be using a certain broker and you're not going to be in the trade. So it's just, I wouldn't really blame myself so much on that part, because it's just how I've been trading for many years now. It's just how I've been trading. It's just now I have to accommodate the fact that a lot of our members are using different brokers, and different brokers, they offer price at different, they just offer it at different prices. So not exactly the same price as my broker. So but in order to make sure that everyone gets activated into the trade, we need to have a balance, which is adding extra pips to the entry, extra pips above the entry. So I've already said that, I said this to a lot of our members, always add a few pips to the entry. But I guess a lot of the times, most of our members may not really remember to do that. They just put in the numbers exactly as I've put it. And I totally understand. So what I'm going to do is just to do it myself. I will just add more to it. I'll add 2 to 3 pips, to 2 to 5 pips to the entry. So if the entry is supposed to be here, I'm going to add like 4 or 5 pips to it, so that whatever broker you're using, it's going to activate you. So we're going to look at indices as well. So the trade entry on indices moving very nicely. I'm going to update it for us to trail stop loss to break even. Trade is a massive profit. So even on NASDAQ, I think one of our members is saying that he didn't get activated on the trade. So right here was the entry on the trade, and as you can see, price mitigated the entry. Like I said, my entry is usually, when I'm right about an analysis, my entry is usually precise. I don't really want to see price coming in halfway and just playing around. Whenever I see that, I just feel like the trade is not going to work anymore, because from how I trade, and my entry is usually the spot of reversal, because I've back tested it hundreds, thousands of trades, thousands of back tested data, like, so that is the reason why a lot of the time when it comes to my entry, I just want to see it take off. I don't want to see any lethargic price action. I just want to see it mitigate my entry, take off. So this is the entry. You can see it for yourself. It's tapped the entry right here, and it's also tapped the entry on my broker as well, which I shared with you on the chart as well. So on my, as you can see on my trading view, it mitigated the entry. On my broker that I'm using, it's also mitigated the entry as well. But unfortunately, for some people, we're not able to get into this trade because their broker wasn't offering price at that level. So, but I'll still do a reanalysis on this one on NAS to see whether we'll be able to get a re-entry on it. If we can, that would be amazing, and we can also capitalize on that and get into more profitable trades. But it's been an incredible week so far, and hopefully next week and next month and the months after that is going to be very profitable for every single one of us. So this is a beautiful trade, 1:19 risk to reward ratio. I just want to make sure that we close this month massively in profit. So I appreciate you all for tuning in. If you do have any questions at all, feel free to drop it in the chat. And until next time, I'll talk to you all in the next live stream. Have an amazing day, everyone.